Too many employers think that they have until December 31st of this year to have an employee benefits package in place for compliance with Obamacare. However, the employer assumption of an end-of-the-year deadline would only be half correct. Especially incorrect for the employer who has not historically provided health benefit coverage to all employees. Open enrollment for Obamacare is effective November 15th, 2014. This means that anybody wanting health benefits can enroll in an exchange starting this November. This becomes problematic when the employer has not yet provided a coverage option. Any employee may ignite regulatory review when the exchange reports to regulatory authorities that the named employer has not provided a coverage option. Employees that meet the income guidelines will qualify for a subsidy or tax credit. The exchange is supposed to contact employers and verify no coverage. The exchange reporting employee subsidies or tax credits is what initiates the regulatory review. The IRS and state will have been notified that the employer has not provided health benefits coverage even if the employer offers coverage later. This means that the employer may still be assessed $2,000 for every full-time employee unless employers can document otherwise dating back a minimum of 24 months. The employer may also suffer additional state and federal regulatory scrutiny. While an excise tax of $2,000 is assessed for every full-time employee, these same employees may be granted whistleblower status, minimizing the employer's ability to terminate future employment. In order to ensure compliance, avoid the regulatory microscope, and avoid related penalties, an employer should have coverage options in place prior to the open enrollment date of November 15, 2014. Employers no longer have the luxury of time, especially employers that historically have not provided coverage to their employees. Now is the time to look at your Obamacare options. There are low-cost but non-compliant Obamacare options in the marketplace, as well as partially compliant Obamacare options available to employers willing to gamble on the IRS. But there is only one low-cost, full compliance option that includes wealth management advantages, and that is Freedom Care. Only through Freedom Care can a business owner take advantage of the captive insurance company option and the 831B tax election in conjunction with Obamacare. This unique captive tax election, enacted by Congress in 1986, was created to specifically encourage the formation of new small captives. Small, medium, and large companies have utilized captives as a part of their business wealth strategy for almost 30 years, and only Freedom Care has bridged the gap and made a connection between the wealth management advantages of a captive and the statutory requirements of the Affordable Care Act by way of its simple, turnkey coverage option.